Hi, Roger Balser, Balser Wealth Management, where we help you make smart financial decisions. Today we're going to dive into an important topic, one that I love, money. M-O-N-E-Y. We're going to discuss an economic theory that dominated the scene for centuries, mercantilism. It was the prevailing mindset from the 1500s all the way up to the American Revolution. It revolved around the idea that a country's wealth, it could be measured by its accumulation of gold and silver. The belief was simple. The more precious metals a nation possessed, the more power, influence, and prosperity it could attain. Gold was considered the ultimate currency, and that was the key to economic success. This approach led countries in Western Europe to adopt various trade regulations, such as imposing tariffs, controlling imports and exports, and monopolizing the markets basically through their ports. You might be wondering, is this another gold podcast or gold video cast? Not exactly. I wouldn't mind going down that rabbit hole, but I want to stay focused. Understanding this is crucial because it sets the stage for discussing the stock market theory. In the midst of trade conflicts and tensions, a new perspective emerged in the 1700s, spearheaded by the father of modern economics, Adam Smith. He introduced the concept of a free market known as laissez-faire, where wealth creation wasn't limited to the availability of gold. He argued that specialization, innovation, and voluntary exchange could benefit all parties involved. This shift in economic thinking laid the foundation for the stock market as we know it today. The first company to issue stock was the Dutch East India Company in the early 1600s, despite operating under the constraints of mercantilism. However, it wasn't until 1776, during the U.S. War of Independence, that the issuance of bonds by the United States marked a significant milestone. By the mid-1800s, as the U.S. experienced rapid growth, companies began selling stocks to raise capital for expansion. Stock market evolved over time, with the New York Stock Exchange becoming a prominent hub for daily trading. It's fascinating. The stock market itself didn't move indoors until 1921, highlighting the historical progression of this dynamic marketplace. Now, a common misconception that I'd like to address is it isn't a simple entity confined to a simple exchange or country. It has expanded to include thousands of companies traded all over the world. The U.S. it still plays a significant role in the global stock market. It's essential to recognize the diverse nature of this complex system. So why does the market matter? Why does the stock market matter? Well, it serves as a mechanism for companies to raise capital to grow. Through issuance of stocks and bonds, businesses can secure funds from investors. This system allows individuals to participate in the success and growth of these companies without a significant barrier to entry. In a world where economic freedom and open markets are valued, understanding the principles behind the stock market becomes even more important. Different countries have embraced market-oriented economies. Hong Kong, Singapore, New Zealand, Switzerland, and Australia, they're leading the way in terms of economic freedom. While the U.S. ranks 11th in the Economic Freedom Index, it's worth noting the challenges of maintaining economic freedom in a diverse and populous nation. Nevertheless, the stock market continues to play a vital role in fueling innovation, economic growth, and wealth creation for individuals and companies alike. In conclusion, the evolution of economic theories from mercantilism to the concept of free markets, they paved the way for the stock market of today. Today, the market enables companies to raise capital, allows investors to participate in a company's success and failures, provides opportunities for wealth creation on a global scale. It's a dynamic and complex system, continues to shape the modern world of finance. So get out there, educate yourself, make smart financial decisions. As always, thanks for watching. And until next time, this is Roger Balser signing off. Stay financially wise.